Hi, everyone. This is Mary Kurek of Frontrunners Innovate. And before we get started, I have to point out I'm wearing red in the United States. It is Red Shirt Friday, and it is because we honor all the deployed wherever they may be. So that's my that's my honor. With me today is Neal Katz, and Neal is the CEO and founder, right? I got that right, of Conscientious Credit Funding Organization. And boy, you are about to hear something that is going to be mind-blowing to you. It was to me. It was to everybody that I have introduced him to or even mentioned it to, because it's kind of a simplistic concept, but it's something nobody has ever grabbed hold of and used as a way to create funding for these wonderfully impactful projects that are out there that do big impact. And I don't want to get too far into it, that I want Neal to explain all that. But first, we want to know Neal. So I'm going to ask Neal to share a little bit about his background and what brought him to this interesting space that he's in now, because clearly he is an idea guy. So let's find out about Neal. So Neal, welcome.
Well, thank you. Good to be here, Mary.
Sure. So tell us about your background. Where did you come from?
Yeah. Well, I like to tell people a couple of anecdotes, and one of them is that right out of high school, I went over to Israel and joined a commune called the kibbutz and was a cotton farmer. And I actually attribute a lot of my approach to business the way people farm cotton, because when you're in a field 20, 30 kilometers from your base and something goes wrong with your tractor or a hydraulic hose or an irrigation pipe, you can't really call a lot of resources and wait and take care of things. You have to take care of it in the field. So improvisation is something that every farmer has to learn. And I actually attribute to that experience a lot of my approach in business. Also just solving problems by working backwards. What do I have to fix right now? What's the next step? What's the next step? And eventually it gets to, the entire picture. But you really got to break it down to very small pieces. And farming is the best trainer for that in the world. So I like to say that a lot of it has to do with farming as a young man, which was kind of strange because I was brought up in West Los Angeles and academic parents. And my dad was taught business at UCLA for a while and then became executive vice president of Fortune 100 company. And he would take me to meetings when I was 12, 14 years old. I actually was in the bank escrow for the largest land deal in California in 1964. It's when Japanese bought up a bunch of land for rice in Sacramento Valley. And you just don't get experience and exposures like that. So I've had a financial training almost from the crib, and I just try to apply it as we go.
That's fantastic. I love that background. I mean, he probably had no idea you'd end up over in Israel on a cotton farm.
No, not at
but
all.
You didn't know that either when you were younger. That's fantastic. So we are, post, college or all the earlier education now and the kibbutz. And we're grown up, we're working now. Any corporate life that led you to stop what you were doing and do this? Or tell me a little bit about that transition time.
Well, it's sort of a long development phase. When I came back, I subcontracted for my father, and he had pretty major contracts, like the CAT scan cradle, and we did the construction, the manufacturing protocols for that. I got to work on wonderful things: Southern Pacific Railroad, alternative energy projects, and great exposure to a lot of different concepts. But eventually led to me getting into securities. I was due diligence officer to a securities firm and actually formed my own securities firm to license lawyers and accountants and get them a full commission legally. And in doing that, created a common scoring system for syndicated offerings, particularly what used to be called tax shelters, 2-to-1 return, leveraged real estate or oil and gas, that kind of thing. So we actually had a standardized method that would give a rating and a score, and people could decide what they wanted to look at based on that score. And it was a fact base. It wasn't, what's the word I'm looking for? It was fact based. It wasn't, someone's opinion of something.
Yeah.
So the scores meant something. And after that, got involved with a doctor and ended up taking my first company public. I've taken some other companies public as an advisor. That's of course an amazing experience. But I've been pretty well situated in the world of sales and marketing for quite a while. And that led up to a consulting job that actually influenced this.
Fantastic. So let's talk about this. When was this born? And this is Conscientious Credit Funding Organization. So when was it born? And what purpose or what mission were you trying to achieve when you decided to put it together?
Through a friend, the American arm of microfinance, FINCA, F-I-N-C-A, asked me to look at their ceiling that they had hit in fundraising. Okay. And simply put, they had gotten to, I think, $40 million of funding annually, and they were in 60 countries worldwide. But for several years, the ceiling, the total funding had become stagnant because every year they were asking for new money, and they just weren't growing past that. The founder, John Hatch, who started in the forests in South America, lending to tribes, groups of women, microfinance loans, and built this behemoth along with his brother, asked me to look at a way to reconceptualize funding for microfinance. And actually, one night I had a dream and I called him. I was in Los Angeles. He was in Washington, D.C. And said, I think I have the solution. I'd like to present it to your executive committee. How quickly could you convene them? And it was like 6 a.m. my time in Los Angeles. He said, give me till the afternoon. Let me see who's available. That afternoon, I gave them this crazy idea. There really isn't a crazy idea. It's just using really old finance concepts. It's the way ships were sent overseas. It's called credit enhancement. So basically, someone stands in as a guarantor and provides the security for a bank to fund a project. And like I said, this is the way ships sailed to the east and brought back teas and fabrics and other things. Credit enhancement's been there ever since Mesopotamians were shipping wine down the coasts and distributing their wares. So I presented this to them, and basically it was the idea that instead of asking people to give their money away, you'd ask people to make a loan to the microfinance company. And they had a 20-year track record of paying off the loans and increasing the size and everything else. And a really higher track record of repayment than typical banking. And because of the social context of microfinance. And I finished my presentation. There was dead silence. I went, uh-oh, I've really blown it this time, because I spent months studying their financials and trying to figure out things and seeing what was what. And I thought they were credit worthy, but no bank would touch them because the underlying collateral is women in far off villages, right? And after a long time, I said, okay, what I miss? And there was this silence. I didn't know how to handle it because I thought, this could work. And then one of their board members, who was a doctorate of economics at Yale, said, I think you just cured world poverty. Okay, so there is something here.
Yes.
And that led to a later reiteration when we had the financial crisis in 2007, 2008. It jumped forward to then. But the original work was done as a pro bono consulting job for microfinance.
Okay. And so again, what year was this organization born? The one that we're
This
talking about, yours?
organization was we founded a charity in 2016,
Okay.
and we just recently founded a corporation because
Okay.
the charity isn't the ideal way to
Mm-mm.
get the funding we want, which
Okay.
is direct funding of projects for the people involved in them.
Okay.
We don't want to take the money. We want everybody to keep their money.
Yeah. So
Because some really
yeah,
big
paint that picture then. Okay, let's say you have an investor step forward. You're pitching a project that's, that's this green construction project that's going to help it boost the economy in this localized area. We're not even going to name a place in the world, just that it's going to, to give jobs and help with education, help with everything. And lift the poverty level above above, let's just say above. Okay,
Good.
so you've got an investor. What happens? What does that investor do to engage the project?
So first stage for us is design. We design the overall picture and pitch it to both the developer, the real estate developer, the stakeholders, and then we look for someone to be the sponsor depositor.
Mhm.
And again, the key to our program is we ask people to keep their money, okay, but deploy it into the economy.
Okay.
So the easiest and most prosaic example, and then we'll get into the orders of magnitude that are necessary to fund, but the easiest and most prosaic example would be an affordable housing project.
Mhm.
It's shovel ready, the land is purchased, there's been the equity investment in getting the permits, everybody's ready, you have the community pledges, the community's happy with the project, everything's ready to go, and it's time to finance it. That's where, and we've been involved in the design. So there's roughly 25% to 30% of the total cost of the project is already invested in acquiring the land, getting the permits, bringing it up to this point. Now the next 2/3 or the next 75% is the actual construction financing.
Mhm.
And what we can do is we go to people who would have an interest in the development from one perspective or another, or people who simply want to prove this methodology, and or people who want the strategic planning that if we do this enough, the government will see you don't need to increase our taxes. We're going to put the money into the economy ourselves,
Mhm.
okay, and deploy it and get the things done that need to be done. And again, we'll discuss the order of magnitude. But what we ask a corporation to do is put up a CD in a bank that's fully insured. I think your audience probably knows that CDs are syndicated nowadays, so that one CD can be 10 million, but it actually comprised of 400 $250,000 limit FDIC fully backed
Mhm.
deposits through all the banking system. It's called the CDARS program, CDAR. And you can have any amount of CD fully insured at $250,000 limits, syndicated. So we asked someone to put up a CD, it remains on their balance sheet, but also pledge it as collateral for this project. Now we've taken risk mitigation factors into the design program, and second stage is the compliance, making sure everything's been accomplished. So there's reputable construction company, completion bonds, soup to nuts, every risk mitigation we can think of and other people can think of. And this is a pretty secure project, track record, everything else. It's a good bet. And the sponsor buys a CD at the bank and pledges it as collateral for a fully secured loan. Now, fully secured loans at US banks cost between 200 and 300 basis points less than a normal commercial loan,
Mhm.
because they're fully secured and they're sitting with a cash deposit that they can leverage at the Fed window. So the bank has all kinds of lending power off of that. The other thing that can be addressed with this, well, I'll come back to that later. The The next step is the money's financed through traditional construction loan, milestone developments, and multi-stage funding, and enough money to get through sales. And the sales go into a lockbox, and all the money from the revenue of the sales of the affordable homes pay off the debt, the collateral is released, and the sponsor has their money free and clear, which we hope they'll use to do the same thing
Roll right
again.
back into another project.
Go right into another project that we've identified and is waiting for funding. So instead of having, let's say, 10 million or 100 million working once by a grant or giving it to an affordable housing or low-income housing project, within a 10-year period, you could have 4 cycles of the same money.
Sure.
And again, the sponsor, the depositor, keeps their money. It's been on their balance sheet all the time.
Yeah.
So it's a way of creating a new concept to, conceptually. It's sustainable and renewable funding, which is something we haven't heard of before, because the sponsor's keeping their money. It's on their deposit. It's on their balance sheet. It's being deployed into the economy, and the takeout is there. Now, on other kinds of projects other than affordable housing, we make sure there's a definite takeout, either long-term refinancing or securitizing and selling off a chunk of revenues in a fixed income investment for major insurance companies or whoever's in the market for fixed income. We make sure that the takeout is there so the collateral will be released in a timely manner. If it's okay, I'll address how working with a bank helps the bank and can actually change some inequities, some historic inequities.
Go for it.
Okay. Well, astonishing fact is that there's $21 trillion in banking assets in the United States. Black-owned and Black-led minority bank account for 5.2 billion of that 21 trillion. It's, for lack of a better word, obscene and egregious. One of the things that can be done is the Federal Reserve creates per transaction lending limits based on the assets of the bank. So obviously, Black-led and Black minority-owned banks are going to have a very low limit. The largest of those banks in America has a $15 million per transaction limit, which is close to nothing in today's economy for major projects. The exception to the Fed rule on per transaction limit is fully secured lending. So we could actually go to a minority-owned or a series of community banks and give them in one transaction what they're used to making in profit in a year by creating a fully secured loan, and start changing that. The actual ratio is it's 1/4 of 1/100th of 1%, or 2.41 1,000th of the total assets in the United States. So a lot of inequity to address, but this is a way to do it. And instead of the bank being the lead bank and then a major bank taking over, this is a way that community banks and minority-owned banks can enjoy the bulk of the profits, since they're doing the bulk of the work and they're the lead lender, and slowly address that factor as well.
Question, who manages these projects? I'm assuming that you guys as the middle do that. And is there a liability? I know that you were talking about all the risk mitigation and that sort of thing. But from the standpoint of, say, you're working on a project where it's a government entity that is on this side of the house, and then you've got your sponsor on the other, and you're in the middle. Are you managing all of that?
Right. These are private enterprise. They're not government projects. They may have subsidies or sponsorships, some kind of government involvement, and or revenue flow or whatever else, but they're private enterprise. And the evaluation is between the sponsor CD buyer and pledger directly with the construction, the real estate developer. The only thing we're doing is marrying them with the certificate of a fully secured loan transaction,
Okay.
which creates the renewability.
Okay. So if, say I had somebody that I was coming forward that had this wonderful solution to build this entity in, say, another country that was, that would really fix a lot of the problems, and it would be a construction project for sure.
Mhm.
It involves some other pieces, but construction for sure. And yet he has to work with the government there to get it done. Your connecting point, whatever, would be with the private entity that's doing the project.
Yes,
Yeah.
yes.
Okay. There you go.
We,
That's
we,
what I'm
we
trying-
contract with them. Our fee, by the way, is 1%.
Mhm.
We take 1%. There's a 200 to 300 percent savings over the life of the loan, a
Okay.
construction loan.
Mhm.
So we take either half or a third of that, and that way we're sustainable and renewable ourselves. But yes, we work through the person who has the economic interest and make sure that they've lined up their ducks. A great example is we're doing a biofuel plant that has all kinds of wonderful elements. It takes all the farm waste from a local community and produces pure alcohol, which is about as versatile as peanuts. I
Yeah.
mean, just thousands of uses. And actually even tying it into the current eco problem of too much kelp in the ocean. So we can actually harvest kelp as a part of the supply chain for this biofuel plant.
Wow.
But there's, if the plant is located in a designated rural area, there's an 80% government guarantee on the loan.
Really?
So we could have a corporation backing a biofuel local plant,
Mhm.
and 80% of their risk is completely mitigated by the US government. It's a US Department of Agriculture guarantee. And there's other guarantees that are available. And we try to create as much risk mitigation as possible. That's pretty strong mitigation,
Yeah.
full government guarantee.
Yeah.
But can we identify the magnitude of this market and the need that we're looking at?
Mhm.
Is that
Yeah.
okay?
Yes.
All right. Um, we're in a crisis. And if this year hasn't proven that to everybody, then I don't know what can. According to the UN, the US has $38 trillion to spend on energy within the next, some say 7 years, some say 17 years, but that's $38 trillion. There's another $3 trillion that has to go into infrastructure.
Mhm.
There's another $3 trillion that needs to go into affordable housing in the United States. I'm just talking about the United States.
Mhm.
We've identified over $43 trillion of actual need, immediate need, funding over 10 years. And that's just not going to happen through typical government taxation and spending. What we'd like to create after a couple of proven cycles and doing this so it becomes more accepted and normal is create huge public funds where an investor for $500 or $1,000 will be treated the same as a major corporation. Their money will be deposited in a CD. Okay, the CD will be pledged on a major project, let's say, high-speed rail system in the country. So it'd be done segment by segment according to the amount of funding. But why not let everybody who has an extra $500,000 say, I want to invest in my future. I realize how serious climate change is. I want to be involved.
Mhm.
You'd have a mentality akin in my perception to the war bonds in World War II, when Roosevelt asked people, especially Hollywood people, to promote back America, invest in America. Going into war, investing in America was a little bit risky. But because it was the full faith in government, full faith and credit of the US government, even though that's questionable going into war, people did it. And of course, they financed the victory of World War II. A massive amount, $187 billion at that time.
Wow.
And which is equivalent to about 3 trillion today, if you adjust it for inflation. And that's mathematical, and some people will say more, some people will say less, but around 3 trillion. Why not give the public that opportunity again? Not through the government, but through, professionally managed funds that have identified specific uses. So if you want to address providing permanent shelter for the homeless, if you want to provide low-income housing, if you want to provide education for registered nurses where we have a shortage, for trucking drivers where we have a shortage, for a number of different vocations, put the money into a fund, have it deposited, and you'll help finance the fund we need to change. And we need really big funds.
Yeah.
And the key to this, of course, is you can't reach those numbers with single time funding. You can't reach those numbers by giving money away, $43 trillion. Okay. There is a lot of money available. There's $402 trillion in worldwide net wealth. There's $102 trillion just in the United States in household net wealth. And there's even $18 trillion sitting on deposit in banks. So the money's there. It's a question of a new conceptualization. How do we deploy it and keep using it again and again and again? So that's the biggest factor.
It is a mindset shift, but it's not a complicated one. I mean, it's something that we all have done with CDs in our life span, if we are of a certain age, for other projects and other things. It's just taking it to a different level, a different step.
And if you have a kid,
for people to know that it's their money, it stays in a bank, it's not given to you, it's not given to anybody, it's still theirs, it's just being used as a collateral situation, and then it comes back, is released to you when everything's paid off. And there are as much guarantee as you can possibly have to back it, to make sure that
we
everything
mitigate the risk as much as possible.
Yeah.
And then each project is an individual decision for whoever's going to fund it.
Yeah.
And if there's a fund, we talk with the professional fund managers. If it's a corporation, we talk to their corporate group. And this can be a lot of self-interest. You can fund, housing for your corporate headquarters. You can fund education for a dire shortage like nursing shortage, and it all gets paid out of future revenues, and the collateral is released. On vocational programs, the term's a little bit longer than a building project, because a building project's usually under 3 years or 3 to 5 years, even on a major project, and that's usually in different stages. But on vocational programs, it can be a 5 to 8 year pledge. But hospitals that are paying 3 times the cost of nursing, have a vested interest in funding accelerated nurse training, and we have a fully designed program for that.
That's amazing. I love that. And you just gave me another name. I always write names down when I'm doing it. You just gave me another name to write down. This is fantastic. So let's kind of move forward. Let's ramp it up over the next year. You're somebody that's so like a Renaissance man. I mean, you take your ideas, you put them into sort of you've got it a nonprofit that has moved into now a for-profit entity, a corporation. You've written some books. You want to tell us about the books?
Yeah, let me just, before that, just mention that this fits in with a lot of corporate thinking today. So you have the founder of Salesforce, Mark Benioff, and his wife, Lynn, and they came up with this formula for corporations, 1 + 1 + 1. Donate 1% of your employees' hours, donate 1% of your equity, and donate 1% of your net profits to doing good. And his quote is, "The business of business is improving the state of the world." So it's a social consciousness which fits into our conscientious credit. My proposal is we need to add 1% because of how important the need for change is right now. And that 1% is in deposit your money, keep it, but finance projects. So there'd be a fourth one to the 1%.
We have to add to that. I got you.
Okay, to answer your question, I'm a feminist, and I wrote First Person as a woman about a historical character that I hope the world becomes more familiar with. Her name's Victoria Woodhull. She was the first woman to own and operate with her sister a brokerage firm on Wall Street. She had a silent partner that was pretty powerful back then. His name was Cornelius Vanderbilt, the great
Mm,
railroad magnate. And there's
good friend to have.
there's a fun expose of the 1869 gold scandal that led to the 1873 Depression, which was called for approximately 50 years the Great Depression.
Yeah.
So the Great Depression we know was Great Depression .2. And it also triggered the 10-year-long depression in Europe in 1873 to 1883. But so there's a wonderful financial expose in the book, but I write first person as her to show how women have been treated, which most of America is just oblivious to. And a call to women's rights with some of these ridiculous new legislations against women's rights and the right to decide for their body. It's deeply set in the American mentality that women are unequal, and they're not. You know that better than I do. But it was fun to write first person as a woman. The book did receive a lot of awards, and that was gratifying.
Yeah.
So hopefully it'll be a
we can
TV
see where
series.
that impact mind comes from. It's deep. It's deep.
It gets applied in a lot of different areas.
Yeah, this is fantastic stuff. I have one last question for you, and that is, who do you need to help you move forward? I always ask that, is what type of people, if you have names, that's fine too, but be as specific as you can be with this. I want people to see themselves in what you tell us.
Yeah. First of all, if you have a project that needs financing and it's developed to the point where you're actually ready to construct something, we should hear about it and see if we can work with you and help you get the funding to do the financing, which a bank might not otherwise approve. Example is this biofuel plant. They want the company to raise 30% of the project in equity so that it has the wherewithal. And on a fully secured loan, they don't need that additional security.
Yeah.
So we save them the dilution phase and can accelerate their development so they get to revenues faster. So if you have a project, that's number one. Number two, anybody who controls some corporate funds that wants to keep their money, but really fund the future now and fund change now, we should talk. And of course, you know, people who can be influencers like a Mark Benioff or anybody who's considered an authority or just wants to endorse the concept. We're going to come out with a publicity campaign of our strategic alliances, as well as you know, people who endorse the concept, and that will be a very highly publicized campaign. And we're also looking for some equity. So if this sounds really interesting to someone, we'd like to talk to them.
Okay, awesome. I have 4 or 5 names, and that's maybe the same as, and in addition to all of our previous conversations that we've had.
Right.
So this is great. So everyone, if you're watching this on YouTube, go to www.frontrunnersinnovate.com and you'll have a little more information and ways to get in touch, that kind of thing that we like to drop in, websites and that sort of thing. Neal will provide us with all that information, right?
Yeah, and I'll just give you the website for our organization. It's called ccfoglobal.org. Pretty easy.
We'll drop that into the description also for the YouTube, but all that information will be on our website, as I mentioned. This interview is going to be part of my investor series interviews and gets a lot of attention when I do that. And we're going to run it into our podcast. So we have a podcast now. You'll get to access that on our website. So if you're one of those that likes to listen in the car or while you're walking, you'll get to do that too. So thank you, Neal. I appreciate it.
Mary, I want to thank you for all your work. You do this incredible job of connecting people, and it's just as visionary as anything else. That the human element is what makes everything work, and you're just so focused on it and so joyfully contributory to other people's success. It's just astonishing. So God bless you for what you do.
Thank you. I feel like your impact is my impact. It's just if you do it well, I get to do it well too. So thank you, everybody. I appreciate it. Neal, stay with me, and then I'm gonna come off record. Bye-bye.
Thanks for listening.